Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. Look at this, Bitcoin back in the $70,000 range, albeit $79,700 for the moment, but this is definitely not a good look for Bitcoin or the majority of the market. And most altcoins are going to hit pretty hard. So best not to take any longs at this point. When we looked at this, basically Bitcoin on Saturday, there's a pretty obvious descending type of channel. These are bear flag type of patterns or bearish rectangles that typically break to the downside. And that's kind of where we're at there. In hindsight, I wish I hadn't opened an Ethereum long at 2,200. Almost there, take profit target, had to come out and close that early. So folks, it's just kind of a bloodbath right now. Like taking longs is pretty high risk. We don't know where the bottom is at. That did feel like the bottom for majority of altcoins, but we've since seen a pretty significant correction. Bitcoin dominance doesn't know what the hell it's doing. And we do have some CME gaps we're going to talk about here as well. So stay tuned. Make sure you pay attention. Quick congrats to our community members here. Nice profit on $50 per trade, some nice passive income there for our Plus group. That bought us absolutely profitable at this point since we've made some adjustments. Congratulations to JCXB, $500 per trade, even though I don't recommend that, up about 2K in the last week. So congrats on that. I'd say that definitely is worth the value there. What we want to look at here in the back end is the obvious stuff here. First things first, Bitcoin liquidation, where are we at? If I recall correctly, we had some macro liquidation on the downside. That is reflected on the charts here, somewhere in the range of about 76 to 78,000. So that is right there where that lower CME gap has yet to be filled too. So just be mindful that exists. But if we take a look here, locally in the last 7 days, more specifically in the last basically 24 to 48 hours, we see some late longs at 78 to 79,000. Keep in mind, these aren't longs taken at that level. That's where they're going to get liquidated or destroyed if the price goes any lower. We take a look at the liquidation from a macro perspective. This kind of helps drive it home, 76.5 to 78,000. So I would say a long at 76,000, roughly, plus or minus, seems like a desirable factor right now because the price will probably bounce off that level. If we go down to that level, keep in mind we have some pretty significant bearish momentum. The world sucks right now for tariffs and all sorts of trade wars, and it's just destroying the market slowly but steady. So just continue to dollar cost averaging your way down. I have limit orders set all the way from 79 to 70,000, and they keep going higher and higher as the price goes down. That's just me personally, though. I have a lot of Bitcoin. It's pretty much my primary coin in my portfolio. So even though I recommend diversifying, I really also recommend just buying as much Bitcoin as you can. Anyways, take a look at our liquidation delta, 16 billion in short liquidation delta. Usually when we hit 10, it starts to slow down and reverse itself, but we are just retesting this lower low and effectively breaking down. So it's kind of an inverse head and shoulders pattern. Somebody in my community, one of my admins pointed that out earlier. We'll see if that looks present on the chart. I know a lot of altcoins are having that type of behavior. You can kind of see it here though. A pretty big upside down U shape followed by a retest that same support at roughly 80,000. But as far as open interest is concerned, we can see 84,000 would be our local area. So if we do happen to see a rally back up to 84K, that seems like a logical shorting situation or a scenario in which we could consider shorting. But obviously there's a lot of ground to cover between now and then. I don't really foresee Bitcoin just ramping right back up to hit that level. But once more, you never truly know, because yesterday, we came down as low as 70, basically 80,000 even, bounced, recovered up to about almost 84, and rejected off that level. So it does show that we do have some significant resistance there. So let's take a look at the daily time frame, work our way down. Actually, we'll go ahead and start with the monthly, or no, let's do a weekly rather. Do the weekly time frame and kind of go from there. And we'll just go ahead and draw out some larger fib levels here, just kind of give us perspective of where things are at. And again, folks, I want to kind of emphasize caution when using fib levels. Only in the sense that some people seem to think that they're like the only way to trade. And those are people that are pretty much, they're a little dim-witted, no offense, but the truth is you cannot trade solely on this just one thing. You need to have somewhat of a mixed bag of scenarios and potential things that could or couldn't play out, like invalidations, etc. So just know that it's helpful, but it's somewhat of a placebo. A lot of folks are I just see them talking in the community a lot about key fib levels when it is helpful, but those fib levels need to align themselves with other support and resistances, and they become stronger. Okay, so like for example here we can see this 0.65 fib level at 84,000. That's probably going to be a stronger resistance level for us because not only is 84,000 proven to be a previous support that still is yet to be tested as a resistance, but it's also a fib level too. Okay, so a natural retracement area. Either way, I'm just kind of throwing it out there. No discredit on fib levels. I love them. I use them all the time. I just think that some people will misuse them too much and kind of just put everything they got into one fib level, and it's a pretty bad call. Okay, let's take a look at some obvious things here. First things first, when it comes to the SMAs, we're coming up, the 50-day SMA on the weekly is down there at about 76,000, so that adds confluence to that lower range of liquidation. So, just shooting from the hip here, 76,000 seems like a logical area to consider a long, just based on the simple fact that we got a SMA hanging out there. We got that lower area of liquidation that is effectively just, there's a shelf below that. And for the most part, I would say once this macro liquidation gets swept, there's a decent chance we'll see the price action recover. We can also recognize here too that there is a significant fair value gap as low as 73,000. What do you know, 73.7 or 74,000 was our previous all-time high. My money is on the price action inevitably hitting that level and recovering from there. So I would say I'm going to go pretty heavy on longs at that 74 to 76K range. Just kind of, again, thinking out loud here. There's not even a guarantee we're going to hit that, but that is definitely a distinct probability. Speaking of which, let's quickly recognize this here too. Let's go to the daily time frame, and I want to just show you these CME gaps here, so you can kind of see it. In fact, it's probably a little easier to see it on smaller time frames. So quickly to note here on a CME gap here for the previous CME gap, we have 78,000 upwards of about 79,000. So it's not a big number, just a small little window there. But do note that there was a local gap here created just recently when the price gapped down on Sunday, or over the weekend rather. We can see right there, it is from 84,000 to about 87,000. Keep in mind, I'm just kind of paraphrasing. I can highlight these a little more in detail later, but I want you to know that those are present. So if the price does end up recovering, a wick up to 86,000 would make perfect sense, because most people think it's going to stop at 84. There's a lot of mind games that go on here, and these CME gaps on the back end do have a small play, and it's something just to kind of be mindful of too. Once more, confluence. That's all there is to it. We're closer to this lower liquidation. It would make sense for the price to continue lower. That's kind of the general consensus. So the daily time frame, we can see we're working our way down here effectively. You could even draw out a shorter term trend line and kind of see pretty obvious. It's running concurrent with the 20-day SMA, establishing lower highs, excuse me, sorry, and then obviously lower lows as well. So until we see the price action effectively establishing higher lows at the very least, and then higher highs, that's when we see the trend start to reverse itself. But for now, folks, the trend is down. Really no point in taking a long position. And it really feels weird to take a short support too, though. So I would urge caution if you're going to be shorting at 80,000. Be very careful with that. But statistically, you have much more favorability to the downside than the upside based on that sentiment there. Okay. So please note, I'm going to update our playout chart. It's going to be available on Twitter, Telegram, Discord. It looks a little something like this. Let's see here. Go ahead and find one for you. Yeah. So I just kind of give you insight on where I think coins are going to go next. That's all available for you there. Just kind of give me a heads up. My chart does look a little cluttered right now, but I will clean it up. When we take a look at the 4-hour, everything is extremely bearish. We're getting closer to 30 on the RSI, commonly a bouncing point, but the money flow index is fairly high. So I don't anticipate us seeing a strong recovery from here. I do foresee 80,000 being potentially the new resistance for us. We can also recognize as well that we're below, once more, all moving averages. So until we break above tentatively, even this is very tentative, until we at the very least break above 84,000 and or the 20-day SMA, there's no reason to consider a long position. And that doesn't necessarily mean, just because I say don't take a long, doesn't mean you just short your shirt off either. Hindsight's 2020, that would have been a good call to short considering how much bearish divergence we have. But once more, we're starting to find our bottom. Volume is increasing as we get down to this sub $80,000 range. There's a decent chance that we do have a small recovery just based on the simple fact that we're overextended to the downside. But folks, there's too many fundamental catalysts going on right now. It's an insane market to trade, and you're better off waiting for waiting longer for confirmation. That's basically what I've been doing lately. Granted, we only have like 5 trades that I've taken this month. Had to close out a couple early. The ones that are in profit are the ones that I waited the longest on. So I would recommend just being patient and try not to overtrade right now. It's not really a sensible market to trade right now. It's the easy way to understand it. But if it can go down, it will go down, right, folks? That's what we're experiencing. Ichimoku Cloud, everything's confirming that the price action is more likely to go lower. If I were to consider a short, there's a couple of areas of consideration. Once again, 80,000 if we continue to close below 80K. And that would be a short from 80 to roughly 76, 77,000. And then alternative to that, obviously I mentioned this before, 84,000, there's a lot of confluence there with resistance, minus the CME gap just above it. An average position between 84 and 86,000 to the downside makes sense as well. You got to keep in mind, folks, a lot can change between now and then, so don't just blindly do that. But that's kind of what we're looking at for right now. Am I considering or leaning towards along with Bitcoin? Absolutely not. I don't think you should either. Dollar cost averaging your way down is probably the best strategy. I hope you learned something here today, though. Either way, thank you again so much for watching. We'll look forward to seeing you in the next one. Take care of yourself out there. We'll see you soon. Bye-bye.